A strong showing for Amazon. And for a closer look at those strong Amazon results yesterday, I'm joined by analyst Herman Leung of Susquehanna International Group. Has a positive rating on the stock, and he just raised his price target for Amazon. Sheila is also joining us as well, who's been on this story. And Herman, first off, why does it seem that investors are so focused this time on the revenue number at Amazon?
Thanks, Betty. I think last quarter the number was, earnings was actually a bit of a disappointment last quarter, and people were beginning to question Amazon. And I think this time around it just shows that the company's balanced model, not only in its retail business, but for a business for third party, is now back on track for the first quarter. So revenues that was slightly better is actually much better in terms of sentiment for the stock.
Okay, and you raised your price target. As we see there on the screen, it's at $226 right now. What's your price target now?
We're at $275. We raised that from $250.
Okay, and what is that on the back of?
That's on the back of about 35 times our 2013 EBIT estimates, and we think that's a fair multiple considering, the company long-term can grow 35% unit growth on average. They just did 49% unit growth, and that's equivalent to traditional same-store sales. That metric would be comparable to.
Guys, I want to jump in here. I've been looking at these earnings, and one of the things that's really been bugging me is the magnitude of this crush in earnings, right? They reported 28 cents a share, beating estimates of 7 cents a share. But when you take out some of the equity method accounting that they did, the beat wasn't so big, only 2 cents a share. Herman, what do you think about quality of earnings here?
I would say that the focus, there's going to be a lot of moving parts with the taxes because of, all the NOLs the company has at this point. So the number that we like to focus more on is the pro forma operating profit, or the CSOI, consolidated segment income. And that line item actually came in much better than expected, even before you go down to the equity method line. So we were modeling about $204 million for the first quarter, and they came in at, I think, closer to $394. So it's a massive beat in terms of by any measures on that side of the business.
Herman, you had quite a few questions for Amazon yesterday on the call. Did you get your questions answered? What's left for you?
Well, I think Amazon doesn't tell the street that much, so you actually have to do a lot of work to uncover a lot of the transparency within Amazon. But what I will say is that there's two areas that I'm really focused on. One is the fulfillment center expansion, and two is the web services and how many data centers they're actually expanding there. Now the web services business is an area that I would say it's not as familiar with most investors, but that business is turning into potentially almost a $2.5 to $3 billion business by next year.
Wow. Okay. All right. So again, positive on Amazon stock.